Hey world, it's Ben Willie come back to another video. Family, this video is going to give you a brief analysis of what happened in the market this week. I don't know if you're paying attention, family, but there was something that was called the market short, and it included GameStop, AMC, Bed and Bath, I think Tootsie Roll. And these particular companies, family, blew up. And if you've been in the garden a while, it'll be similar to what happened with Novavax. And I was telling you guys about Novavax when Novavax was like $2.50, right? But now Novavax is at like $220 a share. Now, that had nothing to do with what happened today with GameStop and AMC. What happened with Novavax was actually a situation where Novavax is involved in the coronavirus medication and the testing, as well as with the flu shots. Okay, so if you got into Novavax when it's at $2 or $4 when we talked about it, you done made a gang of cash. You did. You don't come up, right? But you're gonna come up and continue to come up because the company is still basing its high price on revenue. I mean, they're making money. You know what I'm saying? They providing a service that people are buying, purchasing. Okay. Now, GameStop and AMC theaters and Tootsie Roll and all these other companies, other four companies that allegedly just done skyrocketed up, there's a difference. Those companies are making that money. So how do you justify the high price, right? And so you're like, well, what happened? Well, this is what happened, family. In a nutshell, right? It's something called when you short a stock. And when you short a stock, family, that means you're hoping that the stock that you're purchasing, right, is going to go lower. Or you're not even purchasing it. You're borrowing it, right? So like I said, let's say I wanted to get 1,000 shares of GameStop. And I had inside information, right? So what would I do? I would go and say, I want to borrow 1,000 shares of GameStop. And like I said, it says $17 a share. Let's say I wanted to borrow 1,000 shares of GameStop at $17 a share. Well, the company that's going to let me borrow those shares, right? Well, they're going to let me borrow those shares in hopes that in the time that I'm going to give those shares back, somebody going to make a profit, right? Well, I want to make the profit because I feel that this particular company, GameStop, at $17 a share is going to go down. So as soon as they let me borrow the 1,000 shares, family, I sell it at $17 a share, right? Now, what I'm hoping is in a week or two or however long, whatever the contract was, that GameStop goes down to $15 or $10. Because then I can buy it back, give those shares back to who I borrowed it from, and I made me a profit. Remember, I bought it for $17 a share. It dropped to $10 a share. Now I can make me a profit of $7 a share. So I can make some money, right? Well, the company that does that, a lot of hedge funds do this all the time. Well, with GameStop, guess what? It got reversed on them. So this company called Melvin Capital, it's this big hedge fund capital, they borrowed millions of shares of stock from GameStop. Where the people from Reddit.com, this is a platform, guys, where they, it's a conservative platform. A lot of information goes back and forth. Well, I guess apparently the people from GameStop found out that this particular hedge fund company, right, borrowed all this stock. Now, how can you make sure that hedge fund company have to give out a lot of money? Well, you make sure that you have a lot of people buy GameStop. And so they did. And so instead of a hedge fund company, borrowing all those millions of shares of stock at $17, it didn't drop to $10 or $5 like they thought. It went up to $470. And right now it's at $330. Not that GameStop is making money, okay? But a lot of people start buying the stock, manipulating the market. We did. Regular investors. Okay, and so when it got pushed up, what did Melvin Capital have to do? They had to get the hell out of there and sell their stock and cut their losses because remember, If it keep going up and going up, they have to sell those stock back. They got to get those stock back. And so whoever they borrowed those stock from, they had to sell off. And we don't know how much money they lost. Because remember, if GameStop stock would have went down, they'd have made a gang of cash. But since the stock went up, they losing a lot of money. And so just imagine AMC, GameStop, Tootsie Roll. There's a couple of other ones, okay, that are going up a lot, and these hedge fund companies are having a fit. And it's about time that, there was a reverse. Because, see, many times we're the ones that be caught out in the cold. Or, we outside the window looking in while they doing all this short selling because they got this inside information. They are booming up the property values of neighborhoods and having people have to leave their home because of the property taxes, increase. Because they coming in and buying property, at a higher price than it's worth, kicking people out their homes. So finally, the retail investor, like ourselves, had an opportunity to make some money. And they're not liking it. And to this day, right now, guys, it's still going on. They got a couple other companies that they're doing that, that they done kind of found this information. See, you can only hide for so long. If it's on the internet, it's out there. And so when these individuals found out that these hedge fund companies are trying to short sell these other companies, what are people doing? They going in and buying up the stock and pushing the price up. Now, how does that benefit us? Well, guess what? If you buying it at $17, it's at $400 now. You selling it, you're making a gang of cash. Okay? But if you're trying to short sell the stock, right, and it goes up and not down, you done lost a lot of money. You did? So like I said, I hope that kind of explains what happened, family. Like I said, it's all about these hedge fund companies, short selling these companies, and a lot of them going bankrupt because of it. You did? And now that we have an opportunity to actually get in on, a short sale, but reverse it. Because this is the same thing, family, that happened in 2008. When the housing market crashed, what happened? You had these people short sell all these bundles of mortgages. Because remember, they was full of subprime mortgages anyway. And so when people short sold them, guess what? It was a bubble. They made a gang of cash. Okay? Because remember, the market didn't go up. It went down. It crashed. So anyone that short sold during that time made a gang of cash while so many people lost their homes. So, like I say, short sale is an investment tool that people use that are risky. And a lot of the times, like I say, you got to have real inside information to be a short seller. That's why most hedge fund managers, billionaires, really, really experienced investors only deal with short sales. The objective is to make sure that whatever you invest in, the value goes up, right? But can you make money off short sales? Yes, if you do the research, right? But like I said, fam, I hope this information helped you out. I just thought it was pretty fly. Just to see these companies that used to having these billions and billions of dollars in return and don't do anything for the community. It's about time they got a dent in their pockets. And then Robinhood and TD Ameritrade, you guys are restricting investors on selling stock or buying stock. Come on, man. Now you're showing your true colors. You did? All right, fam, I hope you make sure you subscribe to the channel. I hope you like this video. I hope it's an informative video. And like I say, in the meantime, between time, may the Most High Inside bring you joy. And like I say, appreciate the shout out Texas made. That was for you. And being with us out of 5,000.